Many people have lost a lot of money in the forex market, and countless traders have spent years struggling without ever becoming profitable simply because they lack the knowledge I'm about to share with you. All right, this is Ageless. Hit the subscription button right now before you continue. So I will be sharing this secret with you, and I want you to pay attention, maximum attention, because later in this video, I'm going to be going into the charts, and I will also explain the strategies to you because this particular market condition, which is called seek and destroy, has actually destroyed so many traders. Now, this is an unpredictable market condition that is characterized by consolidation and price what manipulation. So when you have a ranging market, when they say, or probably when you see that market is ranging, it is called seek and destroy. Or probably when price is choppy, it is called seek and destroy. But when most people they don't actually know when price is moving towards what seek and destroy. Okay, so I am going to be exposing you into it right now. I want you to pay attention, and in the last part of this video you will get to see and understand the reason why most traders, even those who call themselves professionals, why they have been struggling and why they are not making money. They will make a lot of money in the market and they will lose it back to the market. So now, before we move on to that, now I want to first of all establish a particular point. Okay, you understand? Just like the way I've been doing it. Now, as you can see, this is a what? A fair value gap. And I have explained in my previous classes that what? Fair value gap is a leg. Okay. Now, this fair value gap is actually a bullish fair value gap, right? Now, a bullish fair value gap has the intention to push price upward for buying what modes, right? So now look at this now. Fair value gap has it does two things. One, it attracts price towards itself, and when it attracts price towards itself, then it pushes price away and moves towards its targets. Right now, as you can see, this let's take this as a higher time frame fair value gap. Right, a bullish fair value gap. Okay, that has the intention to push price towards a target, which is what probably this target is a liquidity point. But price moves towards liquidity to grab the money that resides within that region, right? Now we also have what another word fair value gap. This time around, it is a bearish fair value gap, and the function of a bearish fair value gap is to push price lower, right? So and the function is to what attract price first towards itself because the fair value gap is a strong magnet, and when it magnetizes price, then when price enters into the fair value gap, it pushes price away towards what towards its target. So let's take this as a what lower time frame fair value gap. So I am going to establish a point and I'm going into the chart very soon to explain all of this to you. Now, in a situation whereby you now have a fair value gap on a higher time frame, you understand? Let's say this is a bullish, as you can see, this is a bullish fair value gap and on a higher time frame. And the intention of this fair value gap is to push price upward towards a target. Now, along its way, as the price was moving on, as the market was moving upward, now when you now check, or probably when you now switch to what to the lower time frame, and you now discover that there is a bearish fair value gap on the way. Okay, what this will do is that this bullish fair value gap will encounter another bearish fair value gap on the way. You understand? So when they encounter each other, what within that region there is going to be consolidation. You understand? Price will range because there is going to be battle between this fair value gap and this fair value gap. This one is going upwards and this one is coming downward. This one wants to push toward its destination and this one wants to push towards its own destination. So there is going to be back and forth what? Back and forth movement. There's going to be back and forth pressure. There's going to be back and forth what? Energy. You understand? So at that point in time, price will begin to range. And most traders, they actually don't know when price will range. That is why I'm exposing you to it now before we move on to what? to the chart. Now, which of these two fair value gap is going to what? Is going to win along the way? So I am going to be explaining that to you. Now let's go into the chart. Now this is a monthly time frame. As you can see, this is a monthly time frame chart. Now, this is where the price is at the moment. As you can see, we have what? We have a fair value gap, right? We have a fair value gap. Now, let's point out our fair value gap. Let's map it out. As you can see, this is our fair value gap on the monthly time frame. Monthly fair value gap, right? So, and the intention of this fair value gap is to what? Is to take out this high, or probably what? To take out this swing point. So price will be moving towards what? Towards these highs. So that means that we'll be trading from this fair value gap towards between this fair value gap and this high here, right? And this high here. So this is our boundary, or probably you can call it a contest. So our boundary is between here and here because this is monthly time frame, right? So this is a bullish fair value gap and its intention is to push price upward. So we should be trading what? Upward, right? So now let's take a look at what we are actually trying to buttress. So now that we have mapped out our fair value gap, so we wait for price to what? To push into the fair value gap. The moment price moves into the fair value gap and enters into the fair value gap, that is when we can now move to a lower time frame for our entry. Okay, if this is monthly time frame, you go down to what? To 2 or 3 time frame lower for your entry confirmation. Okay, when you are able to enter within this fair value gap, then you will target the high. All right. So now let's take a look at it. Now, if you look at this, now these are our targets. So we are targeting this first one and this what, or probably what, this second one. You know, on this monthly time frame, right? So now, if we now look at it now, you can see that price has come into the fair value gap, right? So price has come into the fair value gap, then we can now go to the lower time frame to what? For our entry confirmation. Once you have been able to what? Enter, then you write the price, you write the market what? Upward. So now let's take a look at it. So this is what our intention should be. Can you see where we are supposed to enter? This is our entry, this is our stop loss. Your stop loss must be placed below this what? This swing, this low. Then your take profit should be between here, just within this boundary. Okay, between here, this first one, or probably what? This swing point. That's our take profit. So after you place your take profit, then price is expected to move. Now look at it. Price is expected to move. Now that price are starting, can you see on this white candle now, price is moving upward. You understand? This fair value gap is pushing price towards our target. So because that is a function of a fair value gap to push price upward. Now, as price is moving upward, when you now check the lower time frame, let's say weekly time frame, you will now discover that on a weekly time frame, look at this. This is a weekly time frame now. Can you see? Can you see where we place our entry, where we place our what? Our TP. Then can you see this is a weekly time frame? Look at that, our first target. Look at that, our second target. Now look at the monthly fair value gap here. You understand? Look at when price, as price is moving, this monthly fair value gap is ready to now push price upward. Now, as price is moving, you now discover that there is on a weekly time frame, there is an opposing bearish fair value gap here. Let me map it out. You will see it. So look at it. Can you see? There is an opposing bearish fair value gap, and this price is moving upward. And don't forget that the function of a fair value gap is to attract price towards itself, and when price gets towards itself, it pushes price away. And this monthly fair value gap is ready to what? To push price towards its target. Is pushing price to pick the money here, or probably the what? The money here, because these are what? Liquidity points. Okay. Now, as it's going, as price is going, as it's pushing price upward, there is an opposition. You understand? There is an opposition on the way. Because and this opposition, its own intention now is to push price down too, towards what? Towards this low, to take out the what? the liquidity within this low. Now, I want to now buttress this. Which of the fair value gap should price should the market obey? It is the monthly fair value gap, because the monthly fair value gap is stronger than the weekly fair value gap. The energy that the monthly fair value gap possesses is stronger than what the weekly fair value gap. So when you encounter these situations, you don't need to panic. Just know that the monthly fair value gap will override the weekly fair value gap. Now, you want to tell me now the weekly fair value gap has its own strength. When price eventually push into the weekly fair value gap, this weekly fair value gap will push price down a little until it has exhausted its own strength. Then the monthly fair value gap will now continue what? To push price upward. Because why the monthly fair value gap is stronger than weekly is because the monthly fair value gap is on the higher time frame. You get it? Now it is stronger, and funny enough, it takes approximately 30 days for this monthly fair value gap to be formed, while the weekly fair value gap just takes approximately 7 days. So which one do you think it should be what stronger? This one, because this one has, while this one was forming, it has what? It was what? Accumulating much energy. You understand? It was accumulating much strength than the weekly, because it took it 30 days for it to be formed. So it is highly stronger than the weekly. So therefore, as this price is pushing upward, it will definitely override this weekly fair value gap and push through it towards to its destination. You get it? So but within this region, when this price gets to this region, there is going to be power tussle. You understand? So that is why we usually have ranging or probably a chopping what market condition. Now let's take a look at this now. Now look at this. This is our intention. Now price is actually expected to push through towards this destination. But when it gets here, this weekly fair value gap has its own energy too. That because its own aim is to also push price downward. Its own aim is to push price downwards, okay? To push price downward to take out this low, right? Now, let's take a look at this. Now, let's take a look at this scenario. In a situation whereby you have an elephant, you understand, and you have this mouse, they are what? They are trading on the same road, but in an opposite direction, right? Can you see the road? Can you see the road? They are moving in an opposite direction. Now, which one do you think will override the next? It is the what? The elephant, because the elephant has what? Greater strength. It will definitely, when they get to this, maybe probably this point where they meet, you understand, there is going to be power tussle. You understand? The elephant in maybe probably initially was what? Moving freely. But when it now encounters this mouse, you understand, there is going to be friction, you understand, for this elephant. So the elephant will be like, oh, what is causing this friction? But eventually, this mice or probably this mouse will also try to push the elephant backward. But notwithstanding, the elephant will crush, because it will crush the mouse, because the elephant has a stronger strength than the mouse. So it will crush the mouse and move upward. So that is the same scenario that we have here that you need to apply here too, because the monthly fair value gap is stronger than the weekly fair value gap. It will definitely override it. So you don't need to panic. After you've placed your trade, you don't need to panic that, oh, there is an opposing. Yes, it will definitely oppose, but it will definitely push through. Okay. Now let's take a look at it. Eventually, what happened? The elephant has crushed the what? The mouse, and it has what? And after crushing it, it went its way to what? To its destination. And in fact, the mouse is dead. Okay. Now let's take a look at it now. Now look at what eventually happened. You see, so price eventually pushed into the weekly fair value gap. And when price pushed through into the weekly fair value gap, on this, look at this, on this white candle, it was a bullish full body. But the weekly fair value gap has its own strength. It now pushed price downward. That is why we have this white wick. So it pushed price downward, and after it has pushed price downward, it now formed another what candle. It now pushed price downward a bit. You understand? Then after it has pushed price downward a bit, the energy is gone. So the monthly fair value gap energy now took over, okay, and continue to what? To push price upward. So can you see it? That is why we have what? That is why we have a ranging market. If we switch to daily now, you understand? Look at this daily. So if we look at this daily time frame, now that we switch to daily, you discover that that region is a what? A ranging or probably a choppy market condition. Now, for ICT traders, you already know what is happening on the higher time frame. Now, when you have a ranging market condition and you draw your support and resistance, you will be like, oh, which part will price break out to? Is it to upward or downward? You understand? If you are a chart pattern trader, you will be guessing. I don't know. You'll be like, oh, I don't know where um, the market will break out to. Okay, but as an ICT trader, you already know what is happening on the higher time frame between the monthly fair value gap and the weekly fair value gap that resulted to this daily choppy market or probably daily ranging market. You knew that the monthly fair value gap will push price upward. You knew that the price will definitely break through. You understand? Break through upward towards what? Towards upward targets. You get it? So that is just it. That is the benefit of knowing, understanding the language of the market, understanding the language of price. Once you are able to understand all of these things, profitability in forex trading will be so easy. You will make a lot of money. You will not be losing money to the market after you've made a lot of money. And you will also know when price is going into consolidation. You will know when price is going into chopping. You will know when price, even when price is in a what? In a ranging, you will know where price will break out to. Okay. Now this is it. So this is daily. Let's switch back to our weekly time frame. Now look at it. Now that, as you can see it now, look at it. Just look at our stop loss entry, you understand? So that is why it is not always good to what? To move your stop loss anyhow. Okay, now look at it. As you can see it now, you see that during this within this region, price has been ranging. It has been ranging. So if you are someone that has moved, maybe probably you felt that, oh, price has gone so far because it is weekly. So if you are taking your trade on a lower time frame, this candle would have, you will see that it is longer, right? So you would have felt that, oh, price has gone far to this point. Oh, let me move my stop loss from this point to this point. And not knowing that this, you have moved your stop loss within the region where there is power tussle between the monthly and weekly fair value gap. So price would have just what? Taking you out of the market, or probably you would have broken even without making money. So what you can actually do is that as price has gone far, you take partial, you take some money out of the market and you leave the rest to run. Okay, that is just it. And what eventually happened, can you see? The monthly fair value gap took over. When it took over, it eventually what? Got to this what? To this final target. Okay, can you see that the monthly fair value gap is stronger than the weekly fair value gap? So seek and destroy condition has actually destroyed so many people. That is because they don't know how to what? Trade it. This is just the part one of it. The part two of it will come out very soon, maybe probably in 3 days time, right? Okay, I want you to watch out for it. And first of all, subscribe to this channel because the moment the part two comes out, you should be the first to see it. So okay, now after price has gotten to this second target, now the energy of this monthly fair value gap is gone. So price can decide to do whatever it wants to do. Price can now decide to turn over. Price can now decide to change direction, or probably to what? To continue in its what? In its initial what? Direction. So I believe you understand that. All right. All right.